Hello.
Hey, I'm so sorry for that.
Hope I'm allowed.
Yeah,
Okay, it's okay. In that place of giving this scenario, let's say somebody today, they have invested 1 million in money market account. Then maybe around next week, around the same time, maybe they have experienced an emergency, and therefore they want to withdraw that money. Of course, they are allowed to withdraw that money, and also there is going to be no charges, or there's going to be no penalties. But now that that money would not have really come to the place of producing interest, because you come to understand with the money market that the interest is calculated on a daily basis, then accredited to the client account every month. That is very key to understand. It is calculated on a daily basis, then accredited into the client account every month. Not the client money market account every month. That's why when you go there, when you go to the business news, and also when you go to the national newspaper, and also the Standard newspaper, when you go to the business section, you come to realize like those rates are listed there because they vary on a daily basis. That is very good to understand. But you come to realize like averagely the interest can be like that. Like personally, I deal with CIC. So like as last year, the CIC declared an interest of 13.26% per annum, isn't it? So after being accredited on a daily basis, then accredited in the client account every month, it came to that approximate. And also something else to know when it comes to the place of withdrawal, maybe after you have already have the money market account, the withdrawal process is very easy, is very simple. What you do, you can initiate the request via an email. What you do, just write an email, say, I'm so-and-so, this is my membership number, and this is the amount of money I would want to withdraw. Then with CIC, immediately after you send that text, you receive a feedback from that is system generated. Then about 5 to 10 minutes, you are going to receive another text, someone now conversing to you and telling you like they have already initiated the process. Then within 2 to 4 working days, the money will be in your account. And also another added advantage when it comes to with money market, you come to realize like it has some kind of disciplines, financial discipline, like but it's not that tight financial discipline, unlike the long-term ones, maybe the one that people say for 10 years and above. But you come to realize like it offers like that simple financial discipline, because with the money market, maybe let's say you are walking along my avenue, or you are walking along the streets of Nairobi, and therefore, of course, most of the time the research, they say that women are impulsive buyers, isn't it? And therefore you have seen a nice handbag and you want to buy it. You see, at that moment, you not be able to access that money. So you come to realize you would have saved in that scenario, because it takes 2 to 4 working days to access your money. And also with money market, the process of creation is very simple. With money market, the process of creating the account is very simple. What you need are just the ID, then the KRA PIN number, the next of kin details, the passport photo, and also the next of kin details. Basically, it's just a simple process. The things that you always require when opening a bank account is the one that you are supposed to have when it comes to the place of creating and opening of money market account. And also something else to note when it comes to the place of money market, you see nowadays, instead of people putting their money in the banks where you come to learn and not unless really you have gone for the option where you are depositing some fund at a fixed duration of time, isn't it? That is when you're able to get the result. But when with money market, the beauty of it, let's say today somebody has put around maybe 1 million, and therefore after 1 month, that 1 million has yielded, let's say it has yielded around how much? Around 5,000. Just an example. So you come to learn that money will be part of your principal. So instead of now your investment to be 1 million, your investment now they will be 1 million 5 5,000. So you come to realize like it is compounded, and that makes it beautiful to make sure like there's going to be that growth in your income. Basically, money market is money working for you. Something to also to understand, of course, most of people of financial institution that deals with money market, of course, are insurances. And of course, most people when they hear of insurance, they think that as long as you're investing in an insurance product, in an insurance company, like there is going to have an automatic life cover. But when it comes to bond market, it does not have like protection, unlike the long-term policies, or unlike the long-term product, which they come with inbuilt life cover and life protection. So something to note with the bond market, it does not offer that option, because you come to realize this is the money you're able to access anytime. And also another thing to note when it comes to money market, it is easier to monster.
Duncan, you muted.
Hello, what's up now?
Yeah, you're good.
Yeah, as I was saying, another beauty of money market, you're able to track the growth of your investment, because with RCIC, what you do, you go there at Play Store, you download an app that is called CIC Asset. Then you'll be able to monitor your contribution and how your interest are growing. And also something else to note with money market, and I think this now also applies to all the insurance companies, as long as they are having that that option of investment of money market. You come to understand like if the money is not such big that it can be contained through an M-Pesa, they can send it direct to you via M-Pesa. Yeah, that is noted. Yeah, and also something else to note with money market. Also, there is a 15% tax with the all-in tax, and this 15% with the all-in tax is on the interest, is not on the principal. I will insist on that point. When it comes to money market, government does with the all-in tax of 15% of the interest, not on the principals. And also, depending on the company, they charge a 2% maintenance fee every year. Like it is per annum. It occurs only once a year or once every year. Basically, those are the main things to note or to understand when it comes to the market. It is a low risk investment, and also it offers that emergency savings. Isn't it? It's more of an emergency saving, and also it's more of a short-term product, and also it does not have a life protection. Before we continue, I welcome any questions.
Danny, let's address the questions towards the end, kindly, Duncan. Duncan. Duncan.
Yes, yeah, I am.
Yeah, let's address the questions towards the end, kindly.
Okay.
Yeah.
Yeah, like as I said, when I'm on market, there's actually, when it comes to my market, there's not much talk. Actually, I think in those few minutes I've covered almost everything with my market. Like you come to realize, it's just a simple product. There's not much to talk concerning it, and like the likes of treasury bills or treasury bonds. And also sometimes people want to know, where are this money invested, isn't it? Because I said it's a low risk investment. You want to know where your money are being invested. Basically, these monies are invested in the likes of treasury bills. Of course, treasury bills, they are more of short term. They range from around 3 months to 2 years maximum. And then they're also invested in the treasury bonds, which range from around 2 years to a maximum of 25 years. So basically is where these monies are invested. And also something else to note when it comes to money market, there's no any penalties in case you want to withdraw your money before maturities. or should I say, even when it comes to money market, actually the term maturity does not apply. Maturity applies to products that are long term. Maybe you have taken an education cover that is for more than 5 years, or you are taking a long-term investment plan, isn't it? You see, for money market, nobody is confining you to a particular duration of saving, and that's why I said maybe today you can invest as a monies, and you want to withdraw that money next week. You can withdraw them, and there won't be any penalty. The only disadvantage you come to learn, like it won't have beared any fruits, like there won't be interest, because for money market, for it to begin to bear interest, it has to stay in the account of the relevant institution that you have been invested for more than 1 month. Basically, that's concerning money market. So the key points to note with money market is a low risk investment, is more of an emergency saving. You're able to access your money and time. It does not have life protection, isn't it? And also your capital is always intact, regardless whether there is inflation in the country or not. Your capital is always preserved. I see someone has brought some question there. Yeah, so basically, since they've said like we respond to the question toward the end of the meeting, basically those are the main things to note when it comes to money market. When it comes to money market, that those are the main things to note. There's not much to concern it. It's just that it's a simple product, isn't it? Because you come to realize like the way it is designed in such a way so that everybody, as long as it is within their ability to invest, they can invest. That's why it is not really a complicated product. It's just simple as that. Yes, sir. I welcome questions now.
Okay, we'll just go through the questions together and then you can address them. So from the first one that we had, we had Stephen Musago, who said, please advise the best place to invest on money market and what are the rates of income, that is interest rate, and what are the money markets?
Yes, thank you for that nice question. You see, when it comes to investment, and also if you're a low risk investor, isn't it? As I've said, investors are categorized into three: low risk investors, medium risk investors, and high risk investors. So first, when it comes to the place of investment, you have to check the company. How long has that company been in the industry, isn't it? And also, you have to check that company. Is it regulated by IRA? Of course, most of the insurance companies are regulated by IRA. Is it listed in the Nairobi Security Stock Exchange? Yeah. So, of course, when it comes to the place of recommendation, I know this may seem as if I'm biased, but the best place to invest for money market, I would anytime and day I will always tell people CIC. Why? CIC commands 45% of the market share when it comes to the money market. I'll repeat that. CIC commands 45% of the market share when it comes to the money market. And also with CIC is a company that has been in existence since the year 1968, isn't it? And also if you're in circles, you're able to understand like all the loans that people take there are insured by CIC. So CIC is one of the good companies to invest. And also at the same time, we have, just to mention them, we have the likes of Sanlam, and also yes, the ICA, also their money market is also doing well. But the best in industry as of today is CIC. CIC last year they declared an interest of 13.26% per annum. Please note, as I've told you, with money market, this thing, the interest is calculated on a daily basis. That's why when you go to the Business Daily, when you go to the Standard newspaper, when you go to the Nation Media newspaper, when you go to the business section, you are able to see all those rates. They vary on a daily basis, but now they are credited into the client money market account every month. So we cannot really say like this is the fixed interest rate of this company. That is always determined at the end of the year. is when the company comes and says, now this has been the interest of the year, 13.26%. That is what CAC declared last year. Yeah. Also, as I say, also the Samlang, it is also doing good. So when it comes to investment, first you have to check, is it a stable company? Because you don't want to invest your money, and then the company is not legit. So I always advise my clients, invest in a company that has been in existence about more than 15 years in the business, isn't it? Like it's a stable company. Yeah. I hope I've answered to the satisfaction regarding that question.
Okay. I believe that one is very well addressed. So, Jacinta has a question. In the event that you need the money before maturity, what will be the cost?
With my market, I've said the maturity does not apply. You see, maturity, for us to use the word maturity insurance, like there has to be a specific duration that you're supposed to save. Maybe, and that applies to the long-term product. Maybe you have taken an education cover for 5 years, and now you terminate the contract before the end of the 5 years, or you have taken a long-term product for 10 years, and therefore you want to terminate the contract before those years are over. For that, there are consequences. But with man market, as I said, there are no consequences. For example, even if today we have invested 1 million and you want to withdraw that 1 million next week, no, like there won't be any consequences. The only consequences is like that that 1 million will not have produced any interest. Basically, is that like maturity does not apply when it comes to money market, because this is the money you're able to withdraw anytime within 2 to 4 working days. There will always that leeway of withdrawing. The only thing that will not have happened, that money will not have bear interest. Yeah, because for it to bear interest, it has to stay in the account for more than 1 month. Hope I've answered that question well.
So I'll do the next question. We have Jacinta again. She has a very interesting question here. She's asking, if you save 1 million, what will be the interest? And if you want to get the funds before maturity, so no penalty. Again, there goes the maturity stuff again. Mr. Mumo. Duncan?
I've said concerning money market is a short-term product, investment product, and there's no specification of the duration that someone is supposed to save. Like isn't it? So that's why when it comes to money market, like is the only investments where there are always consequences if you terminate a contract, or when you want to withdraw your monies before maturities, are long-term products. Long-term product. Money market is not a long-term product, it's a short-term product. So I will repeat myself again. With money market, there is no duration of saving. You are the one, you see, you are the one that is driving this project. So you are the one that is going to determine the number of months that you are going to save. You are the one that is going to determine if you want to save for years. Isn't it? With money market, it's not up to the company to tell you that you are supposed to save with us this number of years. So that's why I said, like with the money market, you can invest some monies today and withdraw even next week, and there won't be any consequences. Basically, is that like maturity, the term maturity does not apply to my market. Maturity applies on the long-term product, not short-term product. Yes, sir.
Okay, thank you so much for that. And maybe, can you maybe explain to us how they calculate the
Yes, sir. I'm losing you.
asking, maybe before we go on with the list, how do they calculate these interests kindly? Yes?
Wow, that is a very good question to ask. With my market, what they do, the interest, as I say, it varies on a daily basis. So today it can be 10%, tomorrow it can be 15%, the day after tomorrow it can be 12%. So you come to realize like it is not fixed. It is not fixed. That interest is not fixed. So I think the one that are responsible of doing that is the actuarial team. But for you to monitor the growth of the interest is very easy. You just log into the app, then you're able to see how your interest is growing. For example, last year CSE we declared 13.26%. So it's just simple mathematics from that angle. Anyone can do. So 13.26%, if you had invested 1 million, then you narrowed it down to a monthly basis. But now there are those technicalities that are involved when it comes to on a daily to daily calculation, which is done by the actuarial team. Yeah, but it's all what they do concern the interest is they compound it. It's compounded interest. They compound the interest. That's why I say like if you maybe like you have invested 1 million, then by next month that 1 million has produced an interest of 5,000 instead of your money. So they take that 1 million 5,000 and they reinvest again. So you come to realize like now there's growth of your income. Basically, from where I see that's how it is done. But when you go to the technicalities of how they calculate on a daily to daily basis, that's I'm not able to answer that. That is done by the actuary team. But basically, is that yes.
Okay, thank you so much. So basically, it's to say that you just work with the rates that are provided after the actuaries have done the calculations. Yeah. So I think that's just about it. So we have another one from Immaculate who's asking, does my principal gain interest strictly after 12 months? Does the interest the interest strictly annually? Duncan?
Hello. I think I'm losing you. I'm not heard the question clearly, please.
Somebody is asking,
Come up
does my principal gain interest strictly after 12 months? Is the interest strictly annually?
No, now I'm getting the question. As I said, this interest is calculated on a daily basis. So you come to realize like as much as it is calculated on a daily basis, but the interest is accredited to the client account every month. So it means like, for example, if you invest like 1 million today and that 1 million you want to withdraw it after 1 month, yes, it will have borne some interest. You don't really have to wait for more than one for an entire year to end for that money to bear interest. That's why I've said like it is compounded on a monthly basis. So it tells you your monies are bearing interest every month. So after every month, you come to learn, there's that interest that is being accredited to your money market account. So it's not up entirely for a year to wait for it to bear fruit. Yeah, it is on a monthly basis, on a monthly basis, and we narrow it down into a daily basis.
Okay, so yeah, I think that's clear. And also there is this bit of and if I withdraw my money after 3 months later, it will have gained no interest. So I believe again, like Duncan said, with the market there is no issue of maturity. So Duncan, hello Duncan.
Yes, Sam.
There
So
is
I'm listening.
There is this question: if I withdraw my money after 3 months, after say 3 months later, it will have gained no interest if I had done it. If I deposited it for say a year and then I withdraw it after 3 months, will it have gained interest?
Please come again with the question. I've not gotten the question clearly. Come up again. I'm listening.
If I have my money for on annual basis and then I decide to withdraw it after 3 months, will it have gained interest?
Yes. It will have bear interest. You see, as I said, it is done on a monthly basis. So yes. So if you put your money on a annual basis, then you want to withdraw after 3 months. Yes, it would have bear interest. Actually, even if you withdraw it after 1 month, there will be interest.
Okay. Immaculate, I believe that's very clear. Now, I'll move to the next question. Does the maintenance fee apply on the principal? And when we withdraw before 1 year, does the fee apply?
Yeah, no, it's not upon the. It does not apply based on the principal. It is based on the interest. It is based on the interest, and when 1 year is done, it does not apply.
Thank you so much, Duncan. So Julian here has a question. Is there a possibility of losing the invested money? And what is the best insurance company to invest with? Maybe I can answer that. CIC. Also, here's another one. What's the relationship between the insurance and the bank on the interest rate?
Okay, I begin by answering the question. The question: is it possible to lose the money? The answer, as long as you have invested in a stable company, the answer is no. At any time, your capital is preserved. That's why I've really labored to insist money market is a low risk investment. Like when you come to realize, like whether there is inflation in the country or not, isn't it? You come to realize, like your capital remains intact at any given time. Your capital remains intact. It is a low risk investment. So you cannot lose your money if you are invested in a good company. Maybe the only way that you can lose your money is the company that you invested is not a legit company, and that's why I've really labored to help us understand, like when it comes to investment. First, as much as you want to invest, but also seek the credibility of that investment company. How long has that company been in operation? How long has that company been in business? Isn't it? Because there are many insurances company in Kenya. Actually, they are about 53 as of today. Yeah. So as long as the company is a strong brand, you can never lose the money at any given time because it is a low risk investment. Your capital is always intact. That is well answered. And also the other question is the relationship between insurances and bank.
Yeah.
Where they connect. Where they connect. It's just simple. With bank, sometimes you come to learn, like when to invest in bank, but really you have gone for that option of fixed rate bank. There is no interest. There's no interest. Actually, they charge the maintenance cost. But in insurance, you come to less at any given time. As long as your money stays in insurance, it will always bear some interest. Yeah, there are also, when it comes to place of relationship, there are those, maybe when it comes, like, of course, if you are withdrawing your money, if is a large amount of money, of course it has to be sent to bank. So come to realize that, like, there are those MOUs that insurances company have with banks, so that at least the rates or the rates are reduced, the cost and whatever are reduced. Yeah, so basically that how it operates.
Okay, that's very well. That's very good. Thank you so much, Duncan. We have Doreen who is asking, what happens in case of insolvency?
What happens in case of
Insolvency.
to answer that question, for a company to go into a place of insolvency, as long as the company is stable, and is listed in the Nairobi Securities Stock Exchange, then the IRA they come through. They'll come through. But basically, it's rare. It's rare if the company is a strong brand for it to go to insolvency. Yeah, basically that.
So basically, what you're saying is just be sure with the company you choose to invest with. So Jeff has a question here. Is it wise to invest with Brigham Insurance Company? Jeff, I think I'll take this one, Duncan, kindly. Jeff, I don't think we can speak as to which company is wise to invest with, or maybe whether it's wise to invest with Brigham, but we can speak, but we can say that it is wise to invest with CIC. So Duncan, if you have questions with Brigham, you can definitely invest with CIC. You can reach out to Duncan one-on-one and engage with him, and he will answer whatever questions that you have that you have regarding CIC. But as for Brigham, I don't suppose you can speak for Brigham here. Thank you so much, Joel. Leah here is asking, is there a limit where the interest rates can grow up and go down up? So do you have a maximum limit and a minimum limit for the interest rates?
Yeah, that is a very nice question. You see, whatever determines the interest rate is is the situation how the market is doing in a particular country. But at any given time, your capital is always intact. So when to answer that question, for example, since I began working with CIC, the least I've seen like the interest go low is it was at 9%, 9% per annum, and the maximum I've seen it shoot even to the like even to 15. So there's not really maximum. You see, there's not really maximum, and we cannot really say like there's even the place where it can go to a low. But at any time, the surety with my market is that your capital is always intact. But you see, the company is equally in the business, and therefore they want more clients. So they always try to offer a competitive interest, isn't it? So that they be at a place of advantage compared to the competitors. So at any given time, the company is always seek to give a good interest so that they have more clients. So that's how to answer that regarding is dependent on the market. The interest is dependent on the market and how the economy of the country is doing, because eventually, when it comes to the place of investment in investing, all these companies are investing in one place. They're investing in treasury bills, they're investing in treasury bonds, they're investing in infrastructure bonds, isn't it? So come to realize like there's not much difference. And also to answer whoever had asked about whether it's West question also to invest with Britain. Britain, they are credible brand, but kama venye wanasemanga mwamba ngoma uvuta kwake, invest with CIC. As I said, you command 45% of the market share. But Britain, they are credible. They are also listed in the Nairobi Security Exchange. And also, why should you go with CIC? CIC is also, out of all the insurance in Kenya, it is only CIC that is owned by Kenyans. That most people, they don't know. It's owned by the cooperative society. Thank you. And
Thank you. Thank you so much. Okay, we'll move to the next question. And next question is, can I do it at the comfort of my home using the app? And what's the lowest amount one can invest?
Yes, yes, it is possible to register yourself at the comfort of your home, and the minimum amount you can only to begin with is 5,000. Is 5,000, and also you can choose to top up regularly, whether monthly or it does not really have to be on a specific period, or depending on your cash inflow. You cannot top up tomorrow, you can top up the day after tomorrow, you can top up after 3 months. So basically how you top up is based on your cash flow, but the minimum is always 5,000 to begin with, isn't it? Something to note with the money market is the game of the more you invest, the more you're able to get returns, because you come to realize like someone that is investing, let's say 5 million on 5 million on a year, and then they will not withdrawing. So you come to realize at the end of the year they would have made roughly about 650,000. That is free money. So if you invest something small, you are also going to get more. It's the game of the more you invest, the more you're going to get. Yeah, so basically that is possible to do it at the comfort of your home. Yes.
Thank you so much, Duncan. We have someone who is asking, what is the underlying asset for the money market investment?
What is the underlined?
Asset. What is the underlying asset for the money market investment?
Basically, as I've said, money market, they invest in treasury bills, they invest in treasury bonds, and also they invest in other investment. You see, insurances are regulated by ARA, that is Insurance Regulatory Authority. Now, when it comes to money market, because it is a low risk investment, you come to realize, like, even when it comes to the place of investing, the insurances company, there are particular places they are not allowed to invest. Like, let's say Forex, they are not allowed to invest something like Forex, because Forex is a high risk investment. So come to realize, like, they invest in treasury bills, in treasury bonds, and any other assets that are also that in real estate, is in the, as long as it's something that is outlined within the framework of the IRA investment for the money market. Yes.
Okay, thank you so much, Musioka, for that question, and I believe it has been answered to your satisfaction. We have Julian who is asking, when will I know when to withdraw my savings, bearing in mind that the interest rate fluctuates since money market fund has minimal returns? When do I know when to withdraw? How do I know when to withdraw?
You see, I said money market is an emergency saving. A money market is a short-term goal saving. So the best, you are the determinant of when you are going to withdraw, because you come to realize, like, even if there is variation, there is variation. Most of the time, that variation is not always that a bigger gap. So you are the determinant of when you are going to withdraw it. There is not like this time is the best time to withdraw, isn't it? Unlike shares, you see, unlike shares, they have those best times, like you are to invest, and the best time to withdraw. Money market, it does not play with that. You are the determinant of when to withdraw. Yeah.
Uh, okay, so Leah, Julian, that is, I believe you are now clear on that, that you get to determine when to withdraw. So, Duncan, here we have a suggestion from Leah, who is asking if you can kindly share your contact with the group, so that if anyone wishes to reach you, they can do it. So, Duncan, if you don't mind, you can share with the group your number with your contact details. So far, so good. It's an amazing session we have here. It's a conversation that we're having here that's awesome. And I want to believe that we are getting knowledge on this money market fund, and it is becoming much less of a mistake when we say money market fund. It's becoming much less of a deep of a scary thing when we say money market fund. And I want to believe Duncan is doing his best to give you the confidence that you need. Like, for example, someone had asked about insolvency. Of course, nobody wants to invest their money and then have a company go become insolvent and lose all the investment. So I want to believe that we're getting some very crucial questions answered here. So Jadhi is asking, is there a difference of interest rates for a person who regularly tops up and the one who deposits once in a while? Thank you.
Yes. There's a difference. There's a difference, because the growth of this interest is on a daily basis, isn't it? The interest is calculated on a daily basis. So you come to realize, like, there's going to be that change. There's going to be that variation. Yeah,
Oh,
basically that.
okay, thank you so much, Dad. Now you know that there is going to be a variation. If I got right, depends on you are transactioning, if I may, you're transactioning. This is so good. And I want to appreciate all of you for participating in this, for airing out the questions, and also,
Jimmy,
yes,
I have a question.
okay, no, but
Duncan, that's a good presentation. I have a question pertaining the charges involved. You know, there's no free lunch. So what are the costs that are associated in running this account? Because we know CIC is in business and they will not be doing this activity or undertaking this business for free. So what are the charges? Because I've not heard you speak about the charges.
Yeah, that is a very nice question. As I said, they charge 2%, 2%, 2% on the interest, 2%.
Okay, no, but
So that
2%.
2%, is it on daily basis, on the interest on daily basis, or after every month?
2% per annum. Actually, it's per annum, 2% maintenance fee. Actually, it is called maintenance fee per annum.
Okay, 2% annually.
So
Maintenance.
if you decide to withdraw after 3 months, there will be no charges because it's per annum.
Yes, there will be no charges.
Okay.
Thank you.
Okay. Thank you so much, Robert, for your question. And that's an interesting question. I think I have one of mine, Duncan. Now, if you withdraw after 3 months, you don't charges don't apply. How about if I decide to be withdrawing mine after 3 months? Do you establish like a pattern of someone trying to avoid charges and then come after them?
You see, if you invest in a place and hello,
I'm asking,
mm-hmm.
since if you withdraw after 3 months, the charges do not apply. If someone decides to
Mm-hmm.
be doing their withdrawals after every 3 months, is there like a way of establishing that someone is trying to avoid the charges and then going after them or something, going after them, if I may?
You see, when it comes to investment, if you see where you are investing and then the returns are good, basically we continue and desire to want to invest because for example, maybe you have invested for, let's say, even if it's like 11 months, and now you want to withdraw, isn't it? And that money, you don't have something to do with it. You just want to withdraw because you want to avoid charges. Of course, if you're withdrawing, if it's a big money, it will have to go through the bank. They are going to charge you. So sometimes as an investor and any sharp investor, you have to weigh out the options, the option. And also, like if that money continues to stay there, it's going to produce another interest because it's on a daily basis. Yeah, so that really that really happens. That really happens.
Okay, thank you so much, Duncan, for indulging me. Also, I see our clock says we have 3 minutes left. So anybody has one last question or maybe two last ones, and that made 3 minutes, make it 2 minutes. So one last question. That is here. That's the final question, I believe. What about taxation variation? Every time I get a monthly statement, there's a little deduction that happens to the profit interest rate. The tax variation on the interest rate. So Chad is asking, he's saying that every time he gets a monthly statement, there is a little reduction that happens to the profit interest rate. So how about that, Duncan?
As I said, what the government they do, based on the interest, they do a withholding tax of 15% per annum. So that is also narrowed down to a monthly basis. Basically, that is what happens. The government they do a withholding tax of 15% per annum. Therefore, it's also narrowed down on a day or on a monthly basis. Yes.
Okay, thank you so much, Duncan. I see we have 1 minute, which means we have 40 seconds. One last question, if there is 40 seconds, one question and then call it a meeting. Okay, so I'll just do let's say thank you so much for joining us this evening. Thank you so much for honoring the call. And Mr. Duncan, thank you so much for taking for taking your time to come and share with us your knowledge. And every other participant that has been with us tonight, I want to say thank you so very much. Your presence has been highly appreciated. And once again, Mr. Duncan Mumo, your knowledge, your wisdom on the money market entire idea. We thank you so much for your time and for your wisdom, and even being willing to share with us the wisdom that you have regarding money market fund. So every one of you, once again, I want to say thank you so much for being with us, for joining us tonight. It is exactly 9 o'clock, and at this moment I want to call the meeting adjourned, and I will go ahead and say out of prayer, and then we will call it a meeting. So, King of all the glory, we give you thanks for the time that that you've allowed us to have a session. And don't believe, even as people go ahead to invest, we'll be with them, we'll guide them, and they will be able to implement the knowledge that they've gotten here tonight. Now, as we retire to our beds to sleep, and to pray that you may give us rest, you may give us sleep, that you may rest, King of all the glory, take of us throughout the night, my Jesus, for your good and mighty and dear able. Come in the mighty name of Jesus, we pray and we believe. Amen, amen, and amen. Thank you so much, each and every one of you. Have a very good night. Have a blessed night. Every one of you, be blessed, and great night, all of you. Bye-bye.